Hi, and welcome to another edition of our weekly market outlook report for the week starting Monday, the 31st of January. We have a busy and potentially volatile trading week ahead of us. The week starts with Japanese retail trade data on Monday and also ECB preliminary GDP quarter four figures. On Tuesday, we should be on the lookout for RBA interest rate decision and monetary policy statement. Also, Eurozone unemployment rate for December and US manufacturing PMI figures. Going forward, Eurozone preliminary consumer price index data for January, therefore inflation indication. Also, US ADP employment change and crude oil inventories will be closely watched on Wednesday. On Thursday, the main points of interest are reserved for central banks, Bank of England and ECB interest rate decisions and statements. Also, Australian trade balance is due, and in the afternoon, US manufacturing PMIs and jobless claims data. The week will finish on Friday with probably the most anticipated data release for this forthcoming week: US non-farm payrolls, US unemployment rate, and average hourly earnings. Now, let's take a look at few markets. Now, let's start with the Bitcoin. Bitcoin had a volatile corrective pullback over the past several trading sessions, and finally we saw this oversold bounce back, which is in this intraday 1 hourly time frame creating a rising wedge, which tend to break to the downside. Basically in the direction of the current prevailing trend. However, the key trading level is at 39,000. Rally from the current levels into 39,000 and a rejection from there, or a gradual move lower and the loss of this rising support trend line, and in particular loss of 37,000, 36,500 to the downside. A retest of that level from underneath as a newly found resistance could open the way for a gradual continuation of this selling pressure, targeting additional support towards 34,000, 33,490, followed by 31,000 to the downside. Alternatively, if we see a rally and a push higher, and then in particular breakout above 40,000, which is psychologically important round number, an end of day close above that level and a retest of that level from above as a newly found support, that could trigger a short squeeze targeting additional resistances towards 41,270, possibly even towards 44 and 45, 46,280. This is Nasdaq in 4 hourly time frame. Yet again, intraday time frame, massive selling pressure and then sideways consolidation over the past several trading sessions. And on Friday, finally we saw this oversold bounce back and an attempt to push higher. The trend is still to the downside. The price is currently capped by multiple moving averages, and I can also draw a trend line here as well, and I can also use the fib retracement, which will point to 14,500, 14,700, this swing high here, and a 50 period moving average as a major key resistance area. As long as that level holds and we see rejection at that level and a gradual move lower, and then in particular loss of 14,100, that could open the way for another leg lower, an attempt to retest 14,000, possibly even 13,700, 13,650. Alternatively, if we see a push higher and an end of day close above 14,700, that could open the way for a gradual move higher, short squeeze targeting additional resistances at 14,870, 15,000, which is nice and round number, cluster of these lows, and 15,330. This is DAX, or German 40 index, which is exhibiting a coiling price action here. This is the energy build-up. This is the 4 hourly time frame. Bulls and bears are exchanging trades. Nobody's winning at the moment. Energy is building up, energy is building up, energy is building up. And these type of patterns normally precede explosive breakouts in one way or the other. Now we have a sequence of high, lower, high, so I can draw a little trend line here, and we also have a cluster of these lows here, 200 period moving average, fib retracement, So the key trading level going forward is at 15,650. Push through this resistance and a breakout, an end of day close above that level could open the way for a gradual move higher, targeting additional resistance on the upside towards 15,870, 16,000. Alternatively, if we see a rally and then a rejection at 15,500 and a gradual move lower that could retest initial support at 15,330, a daily close below that level and a retest from underneath as a newly found resistance could open the way for the extension of this consolidation to the downside, targeting additional supports along the way at 15,100, followed by 15,000 and 14,900. Now let's talk about a euro dollar. Euro dollar had massive selling pressure here, corrective pullback. This is the hourly time frame. US dollar strength after that Fed meeting, an indication of the rate hikes going forward, an indication of the intention to carry on with those throughout 2022. Key trading level going forward is at 1.12. As long as that level holds, bears are in charge. So either a rally into 112 and a rejection, or a gradual move lower, loss of these lows at 111.30 could open the way for another leg lower, targeting initially support at 1.11, followed by 1.1090, 1.1050. Alternatively, if we see a rally and a breakout above 112, that could open the way for a gradual move higher, targeting additional resistance at 112.25, 112.30, where the price would retest this falling resistance trend line, and only an end of day close above here and a retest from above as a newly found support could trigger another leg higher, basically a short squeeze or counter trend breakout to the upside, targeting additional resistance at 112.80, 1.13. Let's talk about cable. Cable had very similar patterns as well. Selling pressure, 1 hourly time frame here. Consolidation, a leg lower. Consolidation, leg lower. Now we're seeing another consolidation, just a mini version of these previous consolidations. They tend to be referred to as bearish continuation patterns, and they have tendency to break to the downside. So the key trading level going forward is at 1.3350, cluster of these lows. As long as that level is broken, an end of day retest from underneath of this rising support trend line could then extend this number of points or percentage in a price move to the downside, targeting additional support at 1.33, possibly even 1.3250. Alternatively, if we see a rally from here and a push higher, break above 1.3450, which is the cluster of these two lows here, so support, 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 that would be possibly a trigger. An end of day close above that level could create a short squeeze, oversold bounce back, targeting falling resistance trend line, and breakout above that level could target 135, possibly 135.50. Lastly, in relation to Forex, let's talk about dollar yen. Dollar yen had massive rally higher over the past week. We were talking about the existence of left shoulder, this double bottom here, head, and the right shoulder. We have a nice candle formations and a price pattern breakout, retest, and a move higher, yet again triggered by US dollar strength. This looks very, very bullish. We have a sequence of higher lows. The current price is correcting, but it's overall uptrending market. The key trading level is at 115 to the downside, as long as that level holds. So push to that level and a rally from there, or a rally from the current levels and a breakout above 115.50, 115.50. An end of day close above that level could open the way for a gradual move higher, targeting 116, 116.30, 11630. Alternatively, if we see a push lower, an end of day close below 115, a retest of that level from underneath, that could trigger a deeper corrective pullback towards 114.70, 114.50, cluster of these previous lows, breakout and a retest, and then 114 20 to the downside. Now let's talk about gold. Gold had massive corrective pullback as well. This is the 4-hourly time frame for gold. Previously supported by rising trend line. A key trading level was at 1830. That was lost. Then we had a dip below this rising trend line at 1810. The next level of interest was at 1800, and now the price is dipping lower. So the key trade level going forward for me is at 1800. Okay, cluster of the lows, cluster of the lows, cluster of the lows, 1800, nice and round number. Rally from the oversold levels into 1800 and the rejection would be bearish, or a gradual move lower and the loss of these lows at 1780, a daily close below that level, could also trigger bearish continuation to the downside, extension targeting additional support towards 1770, 1760, 1755. Alternatively, if I see a rally and an end of day close above 1800, possibly a retest of that level from above as a newly found support, that could trigger a short squeeze targeting additional resistance at 1810 initially, breakout above that 1820, and then finally 1830, which would be basically a retest of this previous support, now newly found resistance trend line. Crude oil 4-hourly time frame, ultra bullish, keep moving higher, but I wouldn't be surprised to see some consolidation or even a corrective pullback. We have a sequence of higher lows. The key trading level going forward is at 85, basically rising trend line retest. Pullback to 85 and the rally would be bullish, or a breakout and end of day close above these clusters of the highs at 88, nice and round number, could open the way for a gradual move higher towards 89.50, 90, possibly even 92.50. 93.70 is another level that loads of people are paying attention to. Alternatively, if you see a gradual pullback and an end of day close, but I would be paying attention to 84.55, 84.55, 84.55, an end of day close below that level and a retest from underneath could possibly open the way for more meaningful and gradual pullback towards additional supports at 83.25, followed by 81.80. So there is a zone here of support of approximately 50 to 60 65 points of interest. Thank you for watching. Thank you for listening. Stay safe and happy trading. Bye for now.